Hey everyone, today I'm giving you a tiny passive income shift that can easily change your financial life. High-yield savings accounts. I moved a chunk of my cash into better accounts last month and earned hundreds more than I could have with a typical savings account. This quick shift can boost your earning potential with less effort than making your morning coffee, but you gotta make sure you understand how they work before going all in. Passive income sounds like a fantasy, but it doesn't have to be complicated. It's money that keeps coming in after you put in a little effort up front. You don't have to trade hours for dollars the way you do at a job. Think of it as putting your money on a treadmill that runs for you. You flip the switch once and it keeps moving. High-yield savings is one of the cleanest, safest treadmills you can use. No complicated investments, no guessing the market, just steady growth that compounds while you live your life. The safety piece is the first thing to love. When you use an FDIC or NCUA insured institution, your deposits are protected up to $250,000 per depositor per institution. That means the anxiety of, what if the bank fails, is handled for you, legally and practically. And you can sleep easier knowing the system is designed to protect everyday savers. But safety alone isn't the point. The point is returning more for that safety. In the current rate environment, the best high-yield savings accounts are paying rates that would have felt impossible a few years ago, with many competitive accounts offering APYs in the low to mid-single digits. That's a huge gap compared with the tiny fractions most brick-and-mortar savings accounts still hand out, and it means your cash can actually earn meaningful interest while staying liquid. If you want specifics, and I know you do, there are promotional and regular offers that can supercharge small balances. Some credit unions and online banks are paying leading APYs on introductory tiers or on the first few $1,000s you deposit. Others require a qualifying direct deposit or a short set of simple actions to unlock the top rate. These offers change, so what matters is the habit. Move idle cash into the best available, watch it compound, and keep repeating that behavior as rates and promotions rotate. For example, a few places right now are offering top-tier APYs on the early portion of your balance while still keeping the rest at competitive levels, which is perfect if you're testing the strategy. Now, let's make this real with a simple plan you can put in place today. First, build a liquid emergency layer. 3 to 6 months of living expenses parked in an easy-access high-yield savings account so you can breathe when life throws a curveball. That money needs to be instantaneous, access money. Not a CD, not a long lockup. Because the whole point is calm, ready cash. Second, for money you won't touch for a while, use higher yield buckets or short-term fixed options to lock better returns. That two-tiered structure keeps you nimble and optimizes yield without speculation. Here's the motivational truth. Success is about attention. The act of moving a few thousand, or even just a few $100s into a better account signals to your brain that you're serious, and that small act creates momentum. And one move breeds another, and suddenly you're optimizing the rest of your financial life. And because small victories build confidence, that $400 I mentioned doesn't feel like pocket change. It feels like evidence. Evidence that small actions can make big differences, that discipline pays, and that anyone can do it. Before we go deeper, quick reminder. If this kind of practical wealth work fires you up, hit like and subscribe. We're building something here, a community that wants to win together, and every new member makes us stronger. I post weekly actionable strategies that aren't about luck. They're about decisions you can make right now. Back to strategy. When you compare accounts, don't get hypnotized by the single highest number you see on a web page. Look for the longevity of the rate. Is it a teaser that sunsets after a month? And the conditions tied to the APY. Some accounts hand you a top rate only if you receive qualifying direct deposits or maintain a certain balance each month. Others cap the high rate to the first few $1,000s. Know those rules before you open the account, so you don't get surprised. Also check for fees. The best online options usually have no monthly maintenance fees and no onerous minimums, but it's worth confirming. Finally, verify insurance, FDIC for banks, NCUA for credit unions, so your principal stays protected. I'll tell you exactly what I do because I want this simple system to be replicable. I keep a fully funded emergency bucket in a high-yield savings account that allows instant access, and I rotate any extra cash into the highest-earning buckets I can find. Sometimes that's a promotional savings tier that rewards new accounts on the first few $1,000s. Sometimes it's a steady, reputable online bank with a strong, long-standing APY on larger balances. The math is humble but powerful. Each percentage point you add to your annual yield multiplies across your balance and over time, and those compounding dollars fund future options, a down payment, a side hustle, a margin of freedom. Remember that safety and yield don't have to be mutually exclusive. You can have both. And remember that small, consistent moves are what create radical financial outcomes. If you treat savings like a chore, you'll avoid it. If you treat savings like a new habit, you'll build fast. Because consistency beats moments of inspiration every time. A few practical tips to keep you sharp. Set a calendar reminder to review rates every 3 months, because the online banking landscape moves fast. Split large balances across different insured institutions if you need coverage beyond $250,000. And automate transfers so the habit happens even on your busiest days. The less friction between intention and action, the faster you level up. Here's the confidence boost. You don't need perfect timing. You need a plan and consistency. If you move $10,000 from a near-zero account to one earning 4%, that change alone is meaningful. You're choosing leverage without risk. Do that move, and you'll feel it. Not just in your bank balance, but in your mindset. That feeling is the fuel that creates bigger moves later. We're not here for empty hype. This is a practical, repeatable upgrade you can make this week. Open the account, fund the emergency layer, automate a monthly transfer, and come back in 3 months to reevaluate. You'll be surprised how fast small choices compound into options. Start today. Move the money that's doing nothing and watch the little wins stack into momentum. This is how financial confidence is built. One intentional step, repeated. If you commit to that routine, you won't just earn a few $100s. You'll build a money habit that keeps giving. And don't worry if you are starting with little to no funds. Just make your first goal to start adding money into higher-yielding savings accounts. Anything that is capable of outpacing inflation, so that you at least know that you are not losing value over time. Thank you for watching the Money Compendium. We hope you enjoyed this brief introduction into high-yield savings strategy. To catch more videos like this in the future, and to help us grow the channel, please consider liking and subscribing. And remember, small actions can make a world of difference. Thank you again, and we can't wait to see you in the next one.